Here is a number worth pausing on. Starting July 29th, your old age security payment goes up by about $9 a month if you're between 65 and 74, or almost $10 a month if you're 75 or older. That might not sound like much on its own, but if you're also collecting the guaranteed income supplement, this same date triggers a full recalculation of that payment too, and depending on your income last year, it could move up, move down, or stay exactly where it is. Most seniors don't know that two separate things are happening on the same deposit date. By the end of this video, you'll know exactly what's changing, why it's changing, and what to check in your own account before that July payment lands. I'm going to walk you through this the way I used to walk clients through it across my desk, back when I was still practicing as a financial advisor here in Canada. No jargon left unexplained, no assumptions about what you already know. Let's start with the basics, because even after decades of collecting these benefits, a lot of people still mix up what OAS actually is. Old Age Security, or OAS, is a monthly payment from the federal government that most Canadians start receiving at age 65, regardless of whether they worked or paid into anything. It's funded from general tax revenue, not from a fund you contributed to directly. That's different from CPP, the Canada Pension Plan, which is based on what you and your employer paid in during your working years. OAS is reviewed 4 times a year, in January, April, July, and October, and adjusted based on the Consumer Price Index, which is simply a measure of how much everyday prices have risen. Here's the part almost nobody mentions. OAS can never go down, even if prices fall. The floor only moves up. That's a real protection, and it's one reason this benefit has held its value so well over the decades. So what's actually happening on July 29th? The government has confirmed a 1.2% increase for the July to September quarter, the largest quarterly bump of the year. For a senior aged 65 to 74 receiving the full pension, the monthly maximum rises from just over $743 to approximately $752. If you're 75 or older, you already receive a 10% top-up that was introduced back in 2022, and your new maximum climbs to roughly $827 a month. Measured against a year ago, that puts total OAS growth at about 2.3% over 12 months. It's not a windfall, but it's real money deposited automatically with nothing for you to apply for. One more thing worth knowing before we go further: not everyone receives the full maximum. The full OAS pension requires 40 years of residence in Canada after turning 18. If you have fewer years than that, you receive a partial pension, calculated as 1/40th of the full amount for each year of residence. So if you lived in Canada for 30 of those 40 years, you'd receive roughly 3/4 of the maximum. The 1.2% increase still applies to your amount, just proportionally. This trips people up constantly because they compare their own deposit to a neighbor's and assume something is wrong, when really the difference simply comes down to residency history. Now here's where most people miss something important. July 29th isn't just a rate increase day, it's also the day Service Canada recalculates the Guaranteed Income Supplement, often called GIS, using your completed tax return from the previous year instead of the one before that. GIS is a separate tax-free monthly benefit layered on top of OAS for seniors with limited income. If your income last year was lower than the year before, your GIS could actually go up on this date, sometimes by more than the OAS increase itself. If your income was higher, say you sold an investment or took a larger withdrawal from a retirement account, your GIS could shrink or even pause. This is why I always tell people, don't just glance at the total deposit and assume it's the CPI increase. 2 different mechanisms are stacked into that single payment. There's also a practical detail worth pausing on: how the money actually reaches you. If you're set up for direct deposit, the new amount should appear in your account on July 29th itself. If you still receive a check in the mail, Service Canada mails those during the last 3 business days of the month, and it can take several additional days to arrive depending on where you live. Before you assume something has gone wrong, the general guidance is to wait 5 to 10 business days past the scheduled date before contacting Service Canada about a missing or short payment. I mention this every year because I still get calls in early August from worried clients who simply hadn't waited long enough for a mailed check to arrive. Let me tell you about Harold, a composite of clients I've worked with over the years. Harold is 68, lives in Truro, Nova Scotia, and spent 34 years as a mechanic maintaining the local ferry fleet before retiring. Harold receives the maximum OAS and a modest CPP payment from his years of contributions. Last year, he pulled a slightly larger amount from his RRIF than usual to cover a roof repair. When his GIS recalculates this July, that extra withdrawal counts as income, and it could shave a noticeable amount off his monthly supplement, even though the OAS portion of his payment is rising. Harold's situation is a perfect example of why one-time withdrawals in a given year can have consequences that show up a full year later, on a date he might not even be watching for. Now compare that to Denise, another composite, 66 years old, living in Red Deer, Alberta, after a career as a hospital administrator. Denise took CPP early at 62, so her monthly CPP amount is permanently reduced, a decision that locked in a smaller payment for the rest of her life in exchange for collecting it 3 years sooner. Her only other income is a small workplace pension. Because her total income sits well under the GIS threshold, she qualifies for a meaningful supplement on top of her OAS. When July 29th arrives, Denise sees both pieces increase. The 1.2% OAS bump and a GIS recalculation that reflects a full year of stable, modest income. For a single senior in Denise's position, with no other income beyond her small pension, combined OAS and GIS can add up to well over $1,800 a month, tax-free on the GIS portion. For someone in her situation, this date is good news across the board, and it's a reminder that GIS exists precisely for seniors whose income doesn't stretch as far as they'd like. Here's a question worth asking yourself right now. Do you know what your net income was last year, the figure the government will use for this recalculation? Most people can tell you their CPP and OAS amounts down to the penny, but very few can tell you the income figure that determines whether their GIS goes up or down. That's the number that actually moves the needle here, and it comes straight from your tax return, which is exactly why filing on time every single year matters so much, even if you think you owe nothing. It's also worth remembering that CPP, the Canada Pension Plan, is paid on the exact same day as OAS, since both programs share Service Canada's benefits calendar. For 2026, the maximum CPP retirement pension at age 65 sits at approximately $1,507 a month, though the average new recipient actually receives closer to $925 because reaching the maximum requires close to 39 years of contributions at or near the top earnings level. If you started CPP earlier than 65, your payment was permanently reduced by 0.6% for every month before your 65th birthday. If you delayed past 65, it increased by 0.7% for every month you waited, up to 42% more at age 70. None of that changes on July 29th specifically, since CPP is indexed once a year in January rather than quarterly like OAS, but I bring it up because CPP counts as income for both the GIS calculation and the OAS clawback calculation we're about to discuss, so the two programs are more connected than most people realize. Let's talk about the other side of this conversation because I don't want you to only think about increases. There's also something called the OAS recovery tax, which most people know by its nickname, the clawback. If your net income for 2025 comes in above approximately $93,454, the government starts reducing your OAS pension for the July 2026 through June 2027 payment period. It's a gradual reduction, not an all-or-nothing cliff, but it can add up. For most viewers watching this video, that threshold is well above your income. And this won't apply to you at all, but if you're still working part-time, drawing a larger pension, or planning a big RRIF withdrawal this year, it's worth knowing that number exists because it directly affects the same July payment we've been discussing. So what should you actually do before July 29th? First, confirm that Service Canada has your correct banking information and mailing address, especially if you've moved in the past year. Second, log into My Service Canada account, which is the free federal government portal where you can see your specific benefit amounts, not just the national averages I've been quoting. Third, if you're a GIS recipient, take a moment to understand what your reported income was for last year, because that number, more than the CPI adjustment itself, is what will determine whether your July deposit goes up or down. And if your income dropped because you retired or lost a pension source, ask about having your current year income used instead of last year's, since there are provisions for exactly that kind of situation. I also want to gently address something that comes up in every comment section on videos like this one. No, you do not need to apply for the OAS increase, and no, nobody from Service Canada is going to call you asking for your banking details to process this payment. If you receive a call, text, or email asking you to confirm personal information to unlock a benefit increase, that is not how this program works, and you should hang up or delete it without responding. If there's one thing to take away from everything we've covered, it's this. July 29th brings two changes stacked into one deposit, a guaranteed OAS increase for everyone, and an individual GIS recalculation based on your own income. The OAS piece is out of your hands, but the GIS piece is worth understanding because your decisions about withdrawals, timing, and tax filing directly shape it. Take 5 minutes this week, log into my Service Canada account, and see your specific numbers rather than relying on national averages. If this helped clear things up, consider subscribing, because I break down a new piece of the Canadian retirement system every week, always with plain language and current numbers, never with hype. Next time, we're going to look closely at the difference between taking CPP at 60, 65, or 70, and why that single decision might be worth more to your retirement than almost anything else you do this year. You've spent a lifetime earning these benefits. Understanding exactly how they work is the last step in making sure you get everything you're entitled to.